right, and we are live.
All right.
Sorry, I stole your line, Sean. But
We're live!
And now, introducing the baddest, most raddest investment group this side of the Mississippi, where real estate investing meets beer. It's Hopportunity Investors.
Still working on the intro. Hey guys, Alex Winfield here with Coastal Group Real Estate, your friendly neighborhood real estate agent. And I'm here with all these other people. This is awesome. Co-host, the beautiful Sean Bowen.
Hey,
Thank you, Sean. And today we've got Mr. John Eubanks joining us, going to be talking about hard money and money in general. And it's going to be awesome. He's going to impart some wisdom, some knowledge on us. So guys, thank you for joining us. Before we get into the details of the night, there are a lot of people who are probably here for the first time, either online or maybe they've never actually joined us in person. Normally this is at a brewery, so it's a little bit different. But thank you for trying this online with us. Guys, Hopportunity Investors is about real estate investing, strategies, financing options, creative financing options, and the implementation of those in the Hampton Roads market and beyond. And we bring in industry experts, professionals to share with us some knowledge, and then we discuss those ideas over some cold, frothy, tasty beer. And the other part is networking. In real estate, you've got to surround yourself with good people, bring you up, give you experiences you don't have. That's a big part of our group. When we are not online, we do meet at breweries because we like to talk about real estate, talk shop. And so, guys, networking, education, come together once a month. And so, like we were in person, if you do have a beer, if you guys don't mind raising it up, quick toast. May your castle be secure and your cup overflowing.
All right.
Cheers. So guys, we just had a great little intro here before we went live, and you know, the big topic is the coronavirus. That's the thing that always comes up in any conversation these days. And so, you know, we're still dealing with it. A lot of people are dealing with it in different ways, affected by it in different ways, some way, shape, or form. But kind of what we discussed is John came in like perfectly right on point. The idea that Hopportunity has is that, you know, the wheels keep turning, and Hopportunity Investors is about grabbing a hold of opportunity that presents itself. So that's why we're here. We want to talk about what's happening in this world around us and then figure out how we can position ourselves to go out and make the best of that situation. So that's why we're here. It's going to be an awesome night. I'm going to let Sean take over and introduce John and say all the things that I forgot to say in the introduction. So Sean, what you got?
What's up, guys? Sean Bowen, Full Circle Investment Group. Always in here, always helping, and always looking to network with you guys, right? So talking about John and what he does and how he is a hard money, private money, direct person, his capital, like it's real, right? And what we're going to do is John's going to tell you about what this looks like and how he operates, okay? I've been around John for years. I've done deals with John. He's helped me a massive amount to get where I am today and knowledge level and being able to do real business, right? And that's probably one of the better parts that we always bring to this group are people that are real, right? There is no bullshit. They're telling you the truth. They're coming straight at you. And hey, if you don't like it, that's okay, but it's done the right way. So guys, again, if you're checking us out and you're knowing who we are, Full Circle Investment Group, Sean Bowen. On here on this panel, you'll see Cameron Peters, Vanessa, Ashley, and then of course you'll see John. These are all the people that allow Hopportunity to operate. And front ground, background, all of it. It didn't work unless everybody here is working on it, okay? So I want to thank all of those guys ladies, thank you for your help. Cameron, thank you so much. And Alex for originally putting this together. But guys, let's dive straight into it. John Eubanks, the man, the commercial lending man, right? Commercial
That's
lending
right.
LLC. So, guys, John has been around for a long time in the business, but around me, I've known him for at least the past, I want to say, 7 to 8 years, because I got started about that time, and right then is where he funded me on a good portion of the deals I did in the beginning, and just a really, really good mentor and a lot of help. So, John, we'll just kind of dive into it and let you talk about it and what you do and what people, how they can come work with you, and just let them, you talk about what you do.
Okay, well, thank you very much. I appreciate the opportunity. And my name is John Eubank with Commercial Lending. Our website is commerciallendingllc.com. So if you want to look at that as well, you're welcome to that. But a lot of people have fear about going to a bank or a private lender, and they just don't know what to do. And if you have a good lender, they're going to help you make your way through this. So don't have that fear. Call a lender. Call Sean about this. Get involved. Don't sit on the sideline another year and say, I wish I could have, would have, that type of stuff. You got to get involved. You know, this is like the game of Monopoly. If you don't sit down at the table, you're never going to have the opportunity to win. And that's what this is all about. There's an opportunity in an up market, and there's an opportunity in a down market. And that's what we try to fill on the financing side. So our programs are totally different than any other lender. We offer short-term, 5% 90-day notes. We offer 10% 6 months or 9-month loans. We don't charge any points. Can't find that at any other place. And we don't require any monthly payments. Our deal is simple. When you sell the property and you make money, that's when we get paid. Now that's a partnership, and that's what a lender is supposed to do. So we're here to help you. We have our full staff of appraisers. You work with your real estate agent here. You find out what you think that property will sell for. Check it out carefully. Get involved and make it work. And you might not need any money to get in this. You probably will. But there's other ways to make these deals work, such as partner with somebody that's got some money. Get your feet wet. Don't just stand there and keep looking out and saying, I should have done this. You need to do it. So we're here to help you. We're all going to work together and make this happen. And that's what we try to do. And when we look at a loan, we want to make sure you're going to make a profit. You know, that's kind of an important key, to make a profit when you sell this property. So we're looking at not only is it going to make a profit, what does the numbers tell us? How fast should this property sell, what it should sell for, and how much profit you're going to make. And that's there to protect you. And that's what we do. And we've been doing this for 22 years. And every single day. And we keep helping people out. So we're here to help you. Pick up the phone and call. All right.
Awesome. So let's talk about real quick, how can somebody bring you a deal and be ready? And knowing, let's say they have some money to be able to do a down payment or be able to work with you, okay? Because that's a big one, right? People don't know what to expect. People don't know what to do. So let's talk to them about what's expected from you as the lender and what's expected as them as the borrower, to say, hey, John, I have a deal. How do I know if it's a deal? And what do I bring to you to start that process?
Well, first of all, go look at the property. Make sure you know what you're looking at. Don't just pull something up online and go, oh, here's one, and you have no idea what it looks like on the inside. You have no idea what it needs. So go to the property, inspect the property. I don't care how bad it is. You need to be there. You need to walk around. Take plenty of photos. Everybody's got a digital camera. There's no excuse to not take 20, 30, or 40 photos, because you're going to forget when you get back home. Oh my God, what did that bathroom look like? That's why you take photos. That's why you can better estimate what this job's going to need. See what this property should sell for. see what they're asking for it, and see what your expenses are going to be to fix this property up and rehab it. And that's doing your groundwork. And now you can start moving forward to bring it in, to run some numbers and see how much profit can be made on the deal. If you're not going to make profit on a particular deal, you simply don't do the loan. And you have to know what it's going to sell for, what your rehab cost is going to be, and more importantly, what you're going to pay for this property. Because your profit is made when you buy it. There's where your profit is. It's made on the purchase price. You collect it when you sell the property. So if you pay too much, you never have a profit on the back end. Profit is made on the acquisition.
Okay. A lot of people in this industry are hearing a few acronyms thrown around, a few terms thrown around, such as ARV, Mayo, loan to value. Can you talk a little bit to everybody about what your loan to value is on most projects? Because I know it does I think it does vary a little bit, but what your loan to value is. Is there a minimum amount required for a loan? And how do you present this to you in a form where it's all put together and done what you want to see without wasting your time?
I think for the most part, you want to be somewhere in that 65 to 70% loan to value, so you can make a good profit in there. And you know, that's really the point you need to be at, the 65 to 70%. You can't afford to buy a home at 90% of value and sell it and make a profit. This is not a reality TV show. That's what they show. You know, I watch some of these shows. Well, we bought it, we fixed it up, we have 300 in it, we sold it for 330. We made $30,000. Really? And they're telling you in the show where, you know, we had real estate commissions and the buyer, we had to pay their closing costs. And I'm like, well, you're in the hole. So don't believe everything you see on TV. Okay. But, you know, talk to somebody that's done this in the past. I mean, you're a good example. You've done this, you've seen this, you know how this really works. So associate yourself with people that have done this. Let them be your mentor and go from there and get 3 or 4 opinions on stuff. It never hurts.
Okay. When you see somebody bring you a project, you'd like to see a breakdown on an idea for rehab, and then you'd like to see comps. Does it matter if they're Zillow comps? Does it matter if they're realtor comps? What would you like to see when somebody brings you this information?
Yes, I think Zillow does a fairly good job producing comps. I think where people miss the boat a little bit is they're looking at a 2-bedroom, 1-bath, 1,100 square feet. And the comps they bring me is a 4-bedroom, 3.5-bath, 2-car garage, 4,000 square feet. And, you know, that's probably not the right comp.
Right.
You really need to look at bedrooms, bathrooms, and square footage. I think those are the 3 things. And keep it within a mile radius, nothing like 5 or 6 miles away. That's not going to be a good comp. So keep it in that same neighborhood and run the numbers based on that. That's what you look at. Yes, a very good question.
Okay. A lot of people want to know, what kind of down payment are you talking about? Is it a percentage of the loan? Is it a set number? How do you equate that? How can somebody know what they're going to have to bring to the table?
Well, that varies, because I've had people go out there and buy a home at way below market. Like we talked earlier, you're making money on the buy, and they bought that property way below market, and it doesn't need a lot of work. So they brought it to me and said, what do you think? And I said, I think you just stole that property. So in that case, very little or no money that they need on that. But other deals, you know, you might have to put down 10 or 20% of the purchase price. In that range is a good rule of thumb. But, you know, the overall is somewhere between 10 and 20% of the purchase price is what you're going to come out of pocket.
Okay.
And that's your equity in the property. You didn't just pay that out. You know, you bought the property for $150,000 and you put down 15 or $30,000. So the loan you started off with 30,000 down, you start off with a loan of 120. You've got $30,000 of your money invested in your property. That's your money. That's your equity.
Okay.
Do you base the amount of equity needed on the experience that the investor has, or is it just kind of a basic ratio you do for everybody?
Well, I think the more experience you have and the more times we've loaned to you in the past, I mean, we're going to, do a better job and increase the loan amount and give you more financing or more flexibility versus someone that's new. And in some cases where people are very new and they need that help, I think it's a great idea to partner with somebody, because now you've got the advantage of the hands-on in doing this job and rehabbing this property and seeing how it's done, and somebody holding your hand. I mean, this is like, you didn't just jump on a bike when you were young and take off down the street as fast as you could pedal it. Someone helped you. Someone kind of held that bike a little bit for you and got you used to that. And then you were fine. You were off to the races. So this is a lot of the same thing. And somebody to partner with you and help you out on that is a great idea. And you learn from that. And that's what we're in this all together for, is, find the deal, bring it in. Let's learn how we can make this work. Don't be afraid.
Hey, John, just one other thing, just kind of to get to the basics, because we've got different people in this group from every level of investing. Can you just kind of explain what hard money, I know don't like to be referred to as hard money lender, but kind of what that is, how the money is made up. And, I think the idea that it's asset based, that as opposed to credit based, that kind of stuff.
Okay. Yeah. Well, a hard money lender typically comes from, you're lending on the hard asset of the property. When you go get a mortgage on a property, they're lending it based on your credit, your income, your assets, your job stability. All these things are really, they're lending the money to you and putting a loan on the property as collateral. But as a private lender, private bank that we are, we're lending on the hard asset of the property. We want to lend on a property that we know it's going to make money. It's a good risk for you. It's a good risk for us. And there's good potential to make profit on that deal. So we're not doing a loan that you're going to buy this property, fix it up, and move in and live there. That's a residential mortgage loan. And this is a private hard money loan, which is different. And that's the type of loan we're doing. So in our loans, we don't want to have people I don't want somebody to pay points. I don't want them to make monthly payments. I don't want any profit from doing this loan up front. I want you to keep your money, put it as down payment, or spend it for the rehab. And when you sell the property and you make your money from the sale, that's when we get paid. You get paid, we get paid. Let's go. Next case, and move on from there.
Cool. Everybody that's listening to us and checking out the feed, remember, you guys can come up with questions. We've got the ladies back here watching the Facebook feed, and there's different groups all over the place we're live in. So you guys throw your questions up there and let us know what you got to ask John, and we'll get these questions to him. Meanwhile, we're going to kind of keep going through some stuff that we have and hopefully hit on some key points for you guys. But remember, guys, open book. John's very open, very easy to talk to. Nothing like, bring them on, right? Let's go. John, we had a question over here. You mentioned 3 to 6 month loans. Do you guys do loans for like 15 months in case we needed some seasoning time, so we have time to refinance the property out?
Typically, we don't do long-term loans. We don't do loans that people are going to buy the property, fix it up, and then refinance the property to pay us off, because that means you're going to be moving into the property. These loans are not done to an individual. They're done to a company. These are commercial loans, and so we make the loan to a company. And, if you want to pay the loan off and then move into the property, that's fine. but that's not really the type of lending we're doing. I don't want somebody to move in the property and they can't get the financing. We're in here, the dog's here, the cat's here, and my mom is staying with us, and you got to help us out. I don't do that type of lending. So, but if you want to, I've got customers that come in and say, can we do the loan and then refinance it and pay you off and then we move in? Sure, that's not a problem, but that's not the type of loan we really do. I mean, these are fix and flip loans. Typically your hard money or private lender is doing a fix and flip. So that's a good question. And that type of loan would be more for like a private, a regular bank, a local bank, a good small local bank that's really going to work with you, and you don't get it lost in the paper shuttle of some big bank that's out there doing a bunch of other loans and they're not concerned about you. Go to the smaller bank. They're the people that'll work with you better.
Okay. If somebody were to do a deal where they call it wholetailing out in the flip and fix world, which they bought the property, it doesn't need a lot of fix up, and then they're going to turn around and sell it, which I think would probably be in that 3 to 5 month window.
Right.
If somebody were to bring that to you as a deal, that would make sense.
Sure. I mean, we do have our 5% program. It's a 90-day note. And there's a lot of people out there. There's different ways people are making money today. They're getting properties under contract and they're just flipping them, selling them off to somebody else, assign it to somebody else and get out. Go to closing on it in the morning, and in the afternoon, they're selling it to somebody else. Those deals are out there. We provide that type of financing, back-to-back closings. There are people that are buying properties, and I call it prehabbing, not rehabbing. So there was a death in the family, it was an estate, they just want to unload the house. It's a mess inside. I mean, it's got all kinds of stuff. So you get in there, they clean the house out, get rid of all the stuff in the house, just straighten it up really good and put it right back on the market like that. It doesn't need a lot of work, but it's a great deal for somebody and you're making it more affordable. So you put that on the market and you price it right. There's the key, because if you have a home priced right, people will beat a path to your door and try to get multiple offers on it, run the price up a little bit, and you're going to closing in 30 or 60 days. So our 5% 90-day program works perfectly for that. No points, just a flat 5% and no monthly payments. That's a good way to do it. So, some cases you don't need to fix the house up. And that works out very well. I've got a lot of people doing that. There are some people now that are actually buying properties, prehabbing them, cleaning them out, and they auction them off. They actually do an auction right there at the property, just like a foreclosure sale, but it's done right in the front yard. You open the door up, the people walk through the house, and 15 minutes later, you're doing the auction, and they sell it. People put down a $10,000 or $20,000 deposit. They have to close in 30 days. There's no home inspection. There's no walkthrough. It is as is, where is, no guarantees or warranties. Done.
Hey, John, where are you seeing those? Where are you seeing those auctions?
Well, I've
That
got a
sounds
guy
pretty
in
awesome.
Maryland. What's that?
That sounds pretty cool.
It is. I got a guy in Maryland that's been doing this for about 3 years now. And he goes to the courthouse and he's always checking on these estate sales. And he talks to the people. In some cases, he just walks up and says, here's my number. You just walk away from the property. He cleans the property out and does an auction. In other cases, he actually goes in and talks to the people and works out a deal. Listen, let's work together and we'll pay off the existing loan. We'll get the property cleaned up. I've got the financing set up, and they sell it and split the profits. Nothing wrong with that. So there's always, opportunity out there, but you got to keep turning under these rocks. You got to keep looking for it. Never stop looking for that opportunity.
Nice.
And it's easy to auction these properties off. There's real estate auction companies, and if you hire one of those companies, you pay nothing for that. And the buyer actually pays the commission on that side. So, and when they're buying a home, it's not contingent on financing. It's not contingent on the sale of another home. It's not contingent on a home inspection. They're putting up an earnest money deposit that's non-refundable. So people need to be aware of that when you're selling the property. But you could sell it. You could sell it any number of ways. You could list it with a real estate agent.
That's when the money meets the road.
Yes, exactly. That's right. That's right.
Let's see. We got a few more questions on here.
Okay.
Somebody wrote, has your lending criteria changed during this pandemic issue?
It absolutely has. We've been financing more properties now than ever because, commercial lending is a private banking operation. All of our money is what we're lending out. We're not selling these loans off. We're not having to find somebody else to sell them to. We're not a pretender lender. We're the real deal guys. So everybody else, we've had calls in the past month, a lot of calls. I'm at the closing table right now, and I just found out that my lender said they can't close the loan. They have no money. Can you please help me? And the reason the lenders don't have the money is because they sell off all their loans. They have to sell them off so they can get the money to go finance 2 or 3 more and then sell those off. So we've had that coming in quite a bit, and we picked up a lot more business because of that. But, with every upturn in the market or downturn in the market, there's more opportunities. Never look at something and going, well, I don't know about now, might not be the best time. Well, when you think that, it is the best time, okay? Because someone else is thinking the same thing. So when do you want to be in the game? When no one's standing there, when you want to be the only person at the front door to buy this home, or do you want 15 people to be at the front door to buy this home? So it's all about timing. In a down market, there's deals to be had. In an up market, there's deals to be had. The difference is the competition is different. And you got to just look at it this way. It's all about the buy price, no matter what. So I'm seeing just as many homes selling. Will that be the same in 6 months or a year from now? No. But the opportunities will always be there. That's what you have to look at.
Very good.
Let's see. Somebody over here was asking, do you finance the down payment for a conventional loan on a rehab for the Burr method?
Okay.
So
whatever the Burr method is.
I don't think you can actually on a conventional loan.
I don't think you can either. No.
Okay.
No. You're on a conventional loan. If I did conventional financing many years ago, 5% of the down payment has to be your own money. The only exception to that is if a family member is giving you 20% for down payment, okay, as a gift. Then I still believe the regulation is you don't need 5% of your own funds.
Okay.
Yeah, I think that's pretty much it. It has to be for family. Other than that, it's not going to work.
Yeah.
Unless it's been in your account for a long time, but I doubt John's going to put money in your account for 6 months.
John, can you speak to, I know when I first met you, it was pretty intimidating to know that you were all over the place, and it was like, man, is this guy really going to give me my attention that I need, or is he going to help me? Can you talk to the people that are listening about where you lend and what areas specifically, so that people this is all over the place for our watchers. They're from as far as up to DC, Maryland, Virginia. They're down to North Carolina, South Carolina. Can you talk to that for a second about where you lend?
Yes, we lend in Maryland, DC, Virginia, all the way through Richmond, Charlottesville, down into Virginia Beach, Tidewater area. We also lend, we have a new office in Charleston, South Carolina, and West Ashley there, and Mount Pleasant there. It's kind of north of Charleston area. That's a really strong area. It's always amazing to me to go into a new area and find out that Charleston is so much like Virginia Beach. The type of homes, the square footage, the neighborhoods, what they sell for. So there's a lot of similarity. Fortunately, I have a lot of staff to oversee this, because we have staff appraisers, we have staff underwriters, we have staff closers, accountants, bookkeepers. So they take care of all that. I don't have to worry about all that stuff. But we do have a lot of different account execs. So we don't have loan officers. So we don't charge any points or commissions there. So we don't have loan officers, account execs. They've been with me for years. They all work different areas. We also have a network of our inspectors that goes around and checks on the property, so we can get those draws out really quick. So I have a lot of people helping me. Fortunately, a lot of the work that I do is emails. So my job is to get up early in the morning around 6:30 or 7 and get on the computer and try to knock out 40 or 50 emails. And then by the end of the day, sometimes I'll have anywhere from 150 to 200 emails that I've gone back and forth to respond to. And it's just, you just kind of get used to it. And I travel a little bit from different areas, but most of the time, not like you, Sean. I came to see you. We walked through the property and stuff. That was years ago. I would still come to see if you've got another property you want me to see today. But I don't see that many people anymore because of the size of the company. But surprisingly enough, if you call me or you send me an email, I will respond to that. You will get a response. And some people go, wow, I can't believe you're talking to me. Well,
And I will justify that, because John came to Hopportunity at our second meeting, and
Yes.
And it came out full force, shared a ton of stuff with us, and picked up my calls, answered questions, and so much respect to John. I think anybody who's talked to him, you definitely make yourself very available to people.
Yeah. And I don't want anybody to think they're going to call with a dumb question. Okay. There's no such thing as a dumb question. It's always a good question, because sometimes I'm going to learn from it, and clearly you're going to learn from it. But if you don't call, that's a dumb question. You got to call and get the answer.
I agree.
Or tonight, go online and put your questions in. Then you don't have to talk to me at all.
Get it knocked out.
Awesome.
Yeah. Okay.
All right. Well, let's see. Let's see if we got some more questions coming in over here for you. Let's talk about the type of rehabs and the loans that you've done. I know you've done new construction, you've done a few rehabs. So can you talk to the group about what you're looking for, or like what your forte is, or what you'd rather have, or does it just hey, I'll look at anything?
I think we should talk about the first home we did together.
Go for it. Let's do it.
Yeah. So it was going to be a simple little liftoff. It was a nice little rambler that was on a slab.
Yep.
And all you wanted to do was take the roof off, put a second story on there, until you found that the home, if the termites stopped holding hands, the house would collapse. So, yeah.
Oh yeah.
So
I'm using that one. That's good.
yeah. So you ended up tearing it all the way down to the slab, put it all back. And you got to think about this. Now, you look at this today, and what are you going to say about that job? It was an opportunity. You learned from that.
Oh, yeah.
It wasn't a mistake. You did a great job fixing it up. I would come meet with you at the job. We would go over stuff. What do you think about the bedroom here, or the bathroom this? What do you think about this? And that's what you do. You think about it. You got a lot of different opinions, and you formulate what that house should look like. And when it was done, I was impressed. It looked really nice. You put it on the market, boom, it was gone. It was a beautiful corner lot. It had an extra large 2-car garage that was a real bonus. With, I think the master bedroom was above the garage.
Yep. Master bedroom, master bath. That was my first double-headed shower. That thing was way too wide, way too long. I remember we talked about that. Like, you and I talked about, we were going to put a soaker tub in, and you were like, okay, but what about the shower? And you're like, you got this space, so why don't you just make it a double-headed shower? And I was like, that's actually not a bad idea.
Right.
And we ended up with this like massive showers, massive bedroom. Actually, that house got bought by a local Navy guy, and I think he's still in it today. And I go by because that thing's really close to me,
Right.
and I still go by that thing because it is a
Right.
awesome reminder of what it's like to start what you think an idea is to what you end up with versus, and we made money. That was the whole
Yes.
thing. Like, you walked us through that entire thing and the ideas and, hey, what do you think about this? And then my partners at the time came back and said, okay, I like this, I don't like that. So like, it was a very big collaboration of everybody to still come out where everybody made money. And I mean, it was a really good experience. I agree. It was a good experience. It was not a bad.
Well, I think what also you learned from that is you bought it at the right price.
Oh yeah.
So there's the ticket. If you buy a home at the right price, it's almost impossible to lose on the back end.
Yeah.
So you were able to take a home and have to tear it all the way down. Nothing was there. And you had to redo the footers and foundation and everything.
I remember
Put
we
it
had
all back.
one wall. We had one wall because it was the only thing that kept us from a 6-month plan review.
That's right. That's right. You have to leave one little wall up.
One wall.
And,
We were like, okay, well, the wall's there.
there's no termites here in this corner. That's
Yeah.
the wall we're going to leave up.
And what's funny is after we got the okay from the city, they were like, the framers came in and framed everything up and literally framed up around that wall. And then eventually took it out and then reframed down with a plate and like reframed that entire
Oh,
thing.
yeah. Oh,
It was-
gosh.
It
Yeah.
was
Are you
crazy.
telling me you didn't even keep the one wall that was left?
We couldn't. It was like,
It's
was the
okay
worst.
now. You can say
Yeah.
that now. Because the people who are in there will say, hey, that was a brand new wall. The whole house
Yeah.
is brand new.
The whole, I mean, literally, the only thing we kept was the slab because it just kept getting. It's one of those things where it says like you open up a can of worms every time you do one little thing. It was a can of termites
Yes, yes,
down
yes.
in concrete. So
You know, there was a property that new home the guy was building over in Norfolk. And when I went to look at his job, I remember your shower being really big, and he was going to put a shower and a tub. And I said, yeah, I don't think I would do that. I would just put a big shower here. And he goes, you think that'll sell well? I said, yeah, it's a master. You don't need the tub here. So put an extra large vanity, his and hers vanity. And I came back to that job a couple months later just to check in on it. He called me. Hey, I want to show you the shower, how well it turned out. The thing was huge.
yeah,
I said, you could have a party in this place. He had double heads on this thing. He had body sprayers. He had another, window overhead along this upper wall. It was the biggest shower I had ever seen.
yeah.
Now that was yours was the biggest one I'd seen. This guy topped you. It was almost twice as big. It was literally as big as the entire bathroom. And the people that bought it said, we love this shower. So they must be the cleanest people in Norfolk because that is one huge shower.
That's awesome.
So it's you really you have to enjoy this business. There's a lot of fun to it. I mean, you watch these TV shows and you see what people are doing. Do this for yourself
Yeah,
and make it enjoyable. And if you really enjoy what you're doing, it's not a job.
yeah.
But there will be a few headaches on the way until that house is done and sold and you're signing the papers at the settlement company.
Yep, I agree.
Yeah.
Let's see. I think we don't have any more questions at the moment. So
I actually just put one in there. The people on Facebook, John, would like to know about your journey from investor to lender.
How did I go from investor to lender?
Yes.
Wow, that's a good question because I've never been an investor. I've always been a lender. I started out many years ago working for different banks and on the mortgage side, and then had my own mortgage company for a few years and ended up selling that. And then I decided that I'm going to do like a little partial retirement and just lend my own money out and a little bit of money from some friends. Well, it didn't turn out that way. It just exploded and took off. And so I like what I'm doing, and I'll probably just continue to do this. I've got my son is working for me now. He's in Charleston. My daughter is also in Charleston with my 4 granddaughters and her husband. She works for me. And then I have a daughter that lives here in Northern Virginia with my other 3 granddaughters and her husband. She works for me as well. So it's a little bit of family, and some other friends of mine work for the company, and we've been here for a lot. I enjoy what I'm doing, and I enjoy helping people out, and I enjoy, getting people started. Basically close to about 85% of the loans that I do are for repeat customers. I'm really not interested in doing loans that are ones and dones. One person comes in, I just want to do this one loan, that's it. No, that's really not what I'm after. I want to help people, train people, work with them, show them how you can make money at this, and you keep repeating and going this again and again and again. Up or down market, you can make money, because I've been doing this as a private lender now for close to 22 years. And I've never had a time where we didn't have loans coming in, where we didn't have a need for this. And people are surprised about that and said, obviously in a down market, how can you do loans then? Because there's always an opportunity. So that's what you have to look at. Did that answer that question okay?
Yeah.
Was there a part
Oh,
B to that?
perfect.
That's awesome. Hey, John,
Yeah.
I got a question for you. I know hard money lenders back their funds with different things. Some people are doing it with their own money, a group of partners' money. I think some people are using IRA funds and different type of funds to back their program. How do you guys do it? Do you know, even if you explain how some other people do it as well, that'd be helpful just for us to understand how this kind of works and how.
Well, most hard money or private lenders don't have their own money, or a very limited source of their own money. So what they're going to do is they're going to sell those loans off. So typically they're going to charge 2 or 3 points on the loan up front that you pay at closing. And then they're going to sell that loan off to a secondary investor. That investor wants a couple of points there. So now it became 5 points. That investor wants monthly payments on that loan. He wants to make sure that you're making the payments. So now you got to make monthly payments on that loan every month. So by the time you're down the road 6 or 7 months, you've paid out a bunch of points. You've paid out a bunch of interest. Well, then the loan gets paid off. Well, they've already made all their money up front. So I decided to make this different. I decided that I'm not going to have loan officers. We have account execs. And we don't charge points. We don't charge monthly payments. We don't have an interest reserve for monthly payments. It's just pay at the end. We also will do a loan for 6 months, for an example. You get the property finished and on the market, and you need to extend the loan. I'll give you a free 90-day extension, moving the loan all the way out to 9 months. But I do want the property finished within that 6 months. And then we can extend it out to 9. No fee to extend that loan out. No additional interest. So our profit, like you as the borrower, is paid when you sell the property and you make your profit. That's when we get paid. And that's a partnership. So our money is all private money. I have a lot of money in the company. I have a lot of different friends and family that has a lot of money in the company. So all of our money is right there, ready to go out the door. We also have different smaller banks that we deal with that give us a large line of credit. So if we get a lot of loans pouring in the door, the bank is more than happy for them to give us the money for additional capital. But we use that only when we need it, because what I want to do is keep all of our money working and getting the best return we can. So it's a very simple operation. But, after you've been doing this for 22 years, for the most part, I've often got people calling me, can I put more money in? And the answer on that is no, only if we need it. And I'm not trying to be the biggest lender everywhere. I just want to be the biggest lender in Virginia and Maryland, in parts of DC, not everywhere in DC, and then, you know, in Charleston, South Carolina. And I want to be that lender that you go, I need to close this loan now. And who do I call? Commercial lending. They've got the money. And we do. We always keep plenty of money in reserve just for that special deal that comes in. All right.
We had Vanessa over here that was talking about something that she had, and it said, actually, Vanessa, open up and talk about it. Like, you can write, but go ahead and ask John and talk to him directly.
Oh, the question I put in. Okay, so we had a couple questions. One of them is, what are your interest rates in relation to what the market rates are showing?
It's a good question. And this is going to be very interesting. We've never changed our interest rates in 22 years. So on our 90-day program, it's just a 5%. And on our 6-month or 9-month program, it's just 10%. And we also do new construction that goes all the way out to a year, and it's still just 10%. So our rates don't change, and we don't charge the points. And you don't.
That was the other question that kind of came right after that. Is somebody said that they have 8 acres of land directly across the street from a new home subdivision. So do you lend on new home developments?
Yes, but I can tell you that they got to have a lot of cash to do new home development, because the land is just a small portion of new home development. The biggest chunk of change is putting the roads in, the sewer, all the infrastructure. So you have land acquisition, then you have development. So you have improved lots ready to build on, and then you're building homes. So, you know, people think that I got the land, all I got to do is put a couple roads in and I'm all done, right? No, you got a lot of storm drains, sewer lines, water lines, utility lines. All this has to be built to certain code, and you got to have county approval, and you've got to have tons of engineering work done at a large expense to put stuff like that in. And it depends on where it's located.
Do you think that would be a good opportunity to partner with somebody who maybe has done that before, or
Yes,
who is in that business specifically?
yes.
Just seems pretty complex.
It is. It is. There's a lot to know. I do have a deal right now that's just coming in, and this is with a customer in Norfolk. We've done this on 2 other transactions. One, he did a little project where there was 4 homes that he built, put the road in, a cul-de-sac, and the driveways and utilities. This is another deal he's putting in, and this is going to be 6 homes, another cul-de-sac he's putting in, and there's storm drain, there's sewer, there's water, there's utilities, and it's been 1 year in the development phase and the engineering phase and all the approval phases and everybody having to sign off on this before he's ready to start. So there is, when you're talking about development, that's a long game on that. And I get a lot of calls on development, but most of the time people aren't ready to really hear what it's going to take to put it in. You know, just the pavement on the road, you know, all the, just not the asphalt. It's all the stuff that you're putting underneath that to make that road passable by county specs or state specs. It depends on where that is. Easements and everything. It's a lot of work. So that wouldn't be a first timer wanting to do that. But if there is a project like that, I mean, you know, they can bring it in. Hey, there's a piece of land that I want to get something done. I want to be involved in that. Well, partner up with somebody. Make the phone call, call somebody, call you, call me. Hey, what can I do? Here's a piece of land. It's in the family. We want to do something with it. Okay, there might be something that'll work. And you learn from that. You put the deal together and you see how it's happening and you learn from that. That's a good option.
So John, you mentioned that you have a lot of people that have money in your business. So you have this, the finances available to loan this and within those 24, 48 hour mark. If you have somebody who has a good amount of liquidity who's looking to get into something like this starting off, do you recommend that they just kind of go all in, or do they find a company like yours and kind of partner with you and put money in there?
Well, you know, first of all, you have to have a lot of legal work to really get started in this business. And you really have to know the market very well, who you're going to lend to, what you're going to lend on. Does it work for you? Are you interested? When I first started doing this, my rule of thumb was if I didn't like it, I didn't lend on it. If someone brought me a transaction and I was like, oh, I don't like that neighborhood, I didn't lend on it. And if it didn't make enough profit, I didn't lend on it. And it's very much like that. That you really have to feel comfortable with the transaction, comfortable with the individual, and try to get the, you know, some experience that the individual has. But getting started in this business because you have a pocket full of cash, I think is just too risky for 95% of the population. I don't think I would do that. Okay, you'd probably be better off to find a property that you can buy and fix up with the cash you have and sell it and make money. That's probably the better route to go. And if you don't have enough money, just call me and I'll lend you the rest.
Another question that came in, John, was does it matter what closing company that people bring to close the deal? Is there one specifically you wish to work with, or does it matter at all?
I really like to work with title companies that know what they're doing. For some reason, that helps. There's a lot of title companies that don't have a clue what they're doing. I hate to say that. And it doesn't have to be an attorney, but it has to be a good title company, okay? I'm not going to name names, but let me tell you about a recent transaction. Now, if you know about settlements, yeah, you're going to love this one. If you know about settlements, so here was a property that was under contract. It came into us. We approved the loan. This was a customer that we do a lot of business with. So this customer is watching this tonight. He's probably laughing right now. So the title company used on a fairly regular basis does a pretty good job. Well, they called the lender. These people are selling the house. They called the lender and they got a payoff. The payoff came in and they went to closing about 2 weeks later. The closer did not read the payoff statement completely. Now, this payoff statement only has 2 pages. So we're not talking a book, 2 pages. And about 5 places on that document, it said the loan is currently in foreclosure. It also said that that loan had to be paid off and the money in their office by the 6th of the month. This was March 6th. They closed on March 7th. Okay? Guess what happened on March 7th? It went to foreclosure.
Yeah.
And they went ahead and closed. They recorded our first deed of trust on the property, and they sent the mortgage company the payoff. What do you think the mortgage company did? They sent it back about 2 weeks later with a note. This property went to foreclosure and was sold. Well, the people that bought it at foreclosure couldn't close on it because now we had a lien on that property as well. So, but we're in second position. We're supposed to be in first. So after a whole bunch of calls and a few attorney calls and a few threatening letters, the mortgage company finally agreed to accept the payoff 30 days later and release their first deed of trust. Now, when I got a copy of the payoff, when I heard there was a problem, I said, just send me a copy of the payoff statement. I need to see that. And sure enough, I called back. And my question is, can you read? Okay. Because if you can read, you can clearly see foreclosure in about 5 or 6 places in this 2-page document. And it says this loan has to be closed and paid off by this date. Paid off. Money in our office. Okay.
Man, so y'all got lucky. Lucky that it went through. That's awesome.
Well, the mortgage company eventually understood that it's better to receive a payoff than start a legal battle as well. But still, I mean, I can't blame the mortgage company for being pretty mad about it. I mean, that's what a payoff statement is for somebody to read. So that's a company that I'm currently not using to do settlements because.
So you're saying there are companies you will not work with?
There are a few companies I would recommend you not work with.
Nice.
But then there's some other companies. I mean, you've got companies that you've worked with and they know what they're doing and they know how to get things done and they get the work done fast. And if there's a problem, they call you before the day of closing, you know, and there's other companies call you the day of closing. Oh, if you're not on your way here, maybe you better not show up because we're not ready now. And that's not the way you do business.
I agree.
So yeah, be careful, like anything else, check around, make sure you feel comfortable with who's doing that settlement.
Okay.
Yeah.
Cam had a question, but I'm gonna let him ask it directly to you because it's a lot to read. So we'll let him go directly on it.
Hey, John. So a lot of current interest in the Burr method that we kind of mentioned earlier, which is where somebody buys a property, they rehab that property, then they refinance that property as an investment property.
Okay.
After they've rented it, and then they repeat that process. So I'm wondering if you will lend on a property, given that you're going to lend it to a company, right? But on the backside, exit strategy is perhaps a conventional or a portfolio bank loan, where they're going to pull that money back out, basically recoup their rehab costs with the tenant inside as an income producing property.
Yes, we've done that.
Okay.
We will work with you and set that up. In most cases, I think you're going to find that. So what you're doing is a cash out for an investment property. So you can pull your equity back out. So I'm not sure what most lenders are doing right now about what's the maximum they'll allow you to do a cash out on a rental or investment property. Do you know what that is?
I believe Alex is honestly more familiar with that. Yep.
Alex, what's the max cash out on investment property?
You're muted.
I'm hearing mostly 75%.
Yeah.
Some up to 80%.
Yeah. Okay. And I think it's best if you're going to do that, talk to a bank first before you decide to buy the property. Make sure you've got all your ducks in a row there, and make sure what the max cash out you're talking about. And I would also probably recommend that you deal with more of a local lender or a small bank, because you can get kind of lost in the paperwork when you're dealing with a larger institution. Sometimes they're more interested in doing the purchase transactions for someone buying a home than they are looking to help you out with a cash out refinance on an investment property. So that's one thing I would be aware of. But it's out there, and the interest rates on investment properties are going to be a little higher than owner occupied, and you need to check your rates and see what the programs they're offering. But that's a good idea. I mean, you buy a property below market, you get in there and you fix it up, and then you turn it around into a rental property and get your equity out so you can roll that money right over into another property and keep building it up. And the rental income pretty much pays for the mortgage on the property. And that's what you're after. And with interest rates as low as they are, that's a rare opportunity that you can get a mortgage on a property at a super low rate so that you can possibly have a positive cash flow. The interest, the rental income will offset the debt. So that's good. No problem.
Awesome.
All right. Well, we're right here towards the end, right at 9 o'clock.
Boy, time flies when we're having fun, right?
Yeah. You've been working hard, John. Thank you.
No problem.
Yeah, I really want to thank John. I want to thank you personally and the group as well for taking the time to come on here and do this. It's always an honor to have you on here, and I thank you so much for you taking the time to do it. And hopefully these guys are seeing the value that you are giving alone, like much less, them coming to check out our opportunity groups. Like having somebody of your magnitude and your level and your knowledge I find it pretty much unattainable as far as the price wise. Like you can't.
Well, you guys have got the knowledge too. I mean, you've been doing it a while and you know this. So there's a lot of people, these people that are watching this, they can call you, they can talk to you about this, talk about that house that all the termites were holding hands.
That's right. You mean this business isn't all sunshine and rainbows?
Oh my gosh.
I thought it was easy.
You gotta make the sunshine in this business. You gotta build the rainbows. And yes, if you make the sunshine and you build the rainbows, that's what it's all about. That's exactly right.
Nice. That's good.
Awesome. Well, Alex, take us out.
Well, we totally forgot. Ashley just brought it up. Does anybody want to say what they're drinking tonight? I totally forgot to bring that up. I'm rocking a Stone IPA tonight. I didn't get a chance to go out to my local brewery, so I apologize for that. But Stone's a great craft beer. Anybody else want to rep their beer for the night?
I had a Nanda from Memphis, Tennessee. My sister-in-law just got back and she grabbed me 24 of them. So I was like, yeah, I want some. They're really good, by the way. Really good.
I have a new brand, Kona Spiked Island Seltzer. So hard seltzer, because at a bunch of the other breweries we go to, I get the hard seltzer, and I was like, I've kind of been missing it. Might as well try this one out. I got it at the grocery store, nothing local, but I don't know, it's pretty good.
Nice.
I didn't bring anything. I feel left out. I'll have to make sure I have a fistful and one in each hand next time.
Cam, what are you drinking? Got to unmute yourself. Can't hear you.
Virginia Beer Company, Free Verse. So that's Williamsburg brew. I love this.
Nice.
And it is
Where do you get that?
Here in the supermarket in Williamsburg.
Oh.
Yep.
Okay. I thought it might be somewhere local in Virginia Beach.
No, I'm in Williamsburg, so yep.
Okay.
You in town, John?
What do you got?
What's that?
Vanessa,
Vanessa.
what do you got?
Vanessa, you're up.
I was jealous of Macon last month drinking his whiskey, so I went off beer, and I'm drinking apple martini in a very classy red solo cup.
We actually had a couple of responses on the Facebook page too. Jeff is drinking a local Vienna lager, and then Lawrence is drinking a Chick-fil-A milkshake, which you got to do what you got to do in these hard times.
Hey, man, I like some Chick-fil-A milkshake, so.
Yeah.
Yeah.
Can't hate
Now,
on that.
wait a minute. Did she tell us what flavor the milkshake was?
Oh, Lawrence, yeah, you didn't tell us what flavor. Maybe he'll write back so that we can know. My favorite is the cookies and cream, though.
Wow.
Fantastic.
Yeah, cookies and cream, pretty good.
But yeah, so
Guys, that was awesome, John. Thank you so much for sharing all that with us.
Okay.
I think this has been great. We'll probably have some more questions come in, and maybe we'll share those offline with you. But regardless, it's been a very informational night, and I think it just feeds into what this group's all about with, opportunity. I love that you kind of just dove right in there and was like, recession, what's that? It's always a good time. There's always something. And that's the reality. There's always an opportunity for something.
Right.
And that's kind of what we're here about. And that's why it's cool to surround ourselves with all these people that kind of, have that mindset. And it's fun to come here, have a beer, discuss these ideas, and get creative and kind of get proactive on ideas and try to do something in this business. So
I think the main thing here, never be afraid to make a lowball offer.
Mike Morrison, you hear that?
All day, every day.
Every
Not
day.
really the best you can do.
I ain't scared.
No, I can go lower.
That's right. That's right. Yes, sir. That was awesome. That was awesome. Well, guys,
All
thanks
right.
again. I appreciate
Thank you.
everybody being here. John, thank you so much for taking the time.
Okay.
Always nice to talk with you. I really appreciate it. Guys, thank you so much for joining us, taking the time to watch us. Anybody watching the replay later. Guys, check us out at wholesalingoutofthebox.com if you're looking to get into wholesaling anything, talking about how to find these deals and how to get your systems and processes set up so that you can go and work with John. But otherwise, for the rest of the group here, as usual, Cam, Alex, Ashley, Vanessa, thank you so much for making all this possible. And we'll see you guys on the next one. Thanks again.